So I think few more are expected, I guess.
On behalf of the Department of Commerce, DG Vaishnav College and the Institute of Cost Accountants of India, I welcome the students to the 8th day class on this crash course GST. For today and tomorrow, the resource person is ACMA Saravanaprabhu, who is an expert in the taxation area. Saravanaprabhu started his journey from Sitaram Vidyalaya Matriculation High Secondary School, Chennai, and he has been a topper since his school days. He is a graduate from the Vivekananda College and a silver medalist graduation. He is a qualified cost accountant and associate member of the Institute of Cost Accountants of India, and also member of the Institute of Chartered Accountants of India. He is a rank holder in the CAA exams with 7th rank in the final examination of the institute. He is also a All India rank holder in CA examinations and also a fellow member of the team. And he is CA in practice with a decade of experience in the field of taxation, especially after the emergence of GST. He is one of the most sought persons. So he has been a faculty in NASN, Direct Taxes Regional Training Institute, C&AG, Institute of Cost Accountants of India, Institute of Chartered Accountants of India. And he has delivered a wide range of lectures in various colleges and institutions. He also authored a book on GST, which is preferred by the students for their professional courses. And he has written a lot of journals. He has appeared in TV programs, and he is a commenter on various topics of finance or economics in the public domain. So, on behalf of the department and on behalf of the institute, I welcome you to the session is yours.
So, first of all, I thank the institute and DG Vaishnav College as well for giving an opportunity to address all of you on yet another topic on GST. So today the agenda for the session is very simple. First of all, before I go ahead, I want to see you all very active in today's session, especially 3:30 time, etc. I don't want you to drift off mentally somewhere else. Therefore, please tell me in chat, please confirm via chat that am I audible first of all? Is it clear what I am speaking? Is it clear? Am I audible? Clear to all of you? Please tell me in chat. I'll wait for your answers. Yes, good. So therefore, so the agenda for today's topic, yeah, Sangeeta, thank you. Ashish, thank you. So the agenda for today's topic is very simple. We are going to be discussing input tax credit. Input tax credit, short form ITC. Now on this input tax credit, it's a very vast topic. I can even address for around, to my students at final level, I address this topic for around 15 hours, 15 hours I address them. And as far as inter-level is concerned, I address them for 10 hours on this particular topic alone. Therefore, it's a very vast topic, very wide topic. So in our limited time, whatever little time we have today that we are going to meet, so in this limited time, I am going to give you an overview of ITC. So covering the very important areas and also ensure that the entire topic overview is being given. So that is the agenda for today's session. So as simple as that one. So input tax credit, we are going to be seeing the overview of the various aspects of it so that you get a very in-depth and practical understanding. That's what we can say. So having seen that one, first of all, I'll share my screen with you. Again, once I share, I'll tell, please confirm whether you're able to see it or not. Just a second. Yeah, so now I've shared my screen with you. So please tell me via chat whether you're able to see the screen properly. Yes, you're able to see the screen properly. Good. So again, a few ground rules for today's session. Before we hit these slides, a few ground rules for today's session. We are going to keep it a very interactive session. I will not be speaking just by myself and at your end, because especially we are not face to face. There's a high tendency that you may try to, It's natural that our mind tends to slip. Concentration tends to slip, especially in these online sessions. Therefore, we'll do two things. One, I will ask a lot of questions. Please tell me the answers. As and when I ask you questions, please tell me the answers, point number one. And you also feel free to ask the questions. Wherever you feel like, please feel free to ask the questions through the chat, wherever you feel like it. So let's make it an interactive session. So it's going to be a dialogue, not a monologue from me. It is going to be a dialogue. I'm going to ask you a lot of questions. So please tell me the answers. So that being said, first question for the day. Please tell me, in this particular input tax credit, somehow, I'm sure last week conversation has been going on. You'd have heard this term somewhere. Earlier also, you'd have heard this term somewhere. Input tax credit. Now, what do you know about input tax credit? Can anyone tell me in chat what exactly is input tax credit ITC? Can anyone tell me in chat? Please tell me the answer. Whatever you know till now, you tell me that. Please tell me the answer in chat. I'll wait for your answers. Otherwise, I'll not move on. What do you know about ITC? What is ITC exactly? Please tell me the answer in chat. I'll wait for your answers. I'll not move on. Don't think that today's session I'll be speaking something and you can be doing something at your end. No, we are going to have an interaction today and I'll expect answers from you. So without you answering, I'll not move on to the next area. So please tell me the answer in chat. What is meant by ITC? I'm not able to see anybody answering. Did you understand my question? Yes or no? Input tax credit, okay. ITC means input tax credit, okay. What exactly is input tax credit? Tax paid during purchase, sham good. Tax paid by the buyer on purchase, okay. Tax paid by buyer, good. So fine. So you have answered one aspect of the question. That is, input tax credit means nothing but it is nothing but the tax paid by the purchaser on all his purchases or on all his inputs. That is why it is called as input tax. Tax paid on inputs. Very simple. You're right. But can you explain what you're left out one aspect of it? The entire term, if you look at it, is input tax credit. Correct? You have explained to me what is the first two words. Input tax. Now what you have explained, that you have explained correctly. It is tax paid by the buyer on the inputs, on the purchases. You're right. But why it is called as input tax? That word credit, why it is there? Can you please tell me? Why it is called as input tax credit? Can you explain the significance or the importance of the word credit? Please tell me the answer in chat. I'll wait for your answers. Today is going to be like this. Unless you tell me the answers, we'll not move on. Why it is called as credit? Since the consumers are the ultimate payers of tax, why should they call it credit then? Since it is paid by the consumers, they could call it tax now. They could have stopped with the word input tax. Why are they saying input tax credit? What is the significance of the word credit? What credit is exactly being given here? Can you please tell me? Okay, so I will answer this myself. Liability. Okay, fine. So, Prithvi, I don't think that is correct. So, anyway, good try. Now, I'll just explain it in this slide. Please pay attention. Now, normally, how does a value-added tax system, we call it as a VAT system. GST is a VAT system. Okay. Now, how does a value-added tax system, GST system, how does it work? Normally, value-added tax, all systems across the world, the value-added tax systems will work like this only. How? One, let's assume from a seller's point of view, Mr. X is there, he's the seller, let's assume. Okay, he's the seller. Now, he will collect tax on his sales. Tax on sales, we can say. Let's say some amount is there. Okay. Now, okay, not an issue. We'll give a number. Let's say rupees 100 is the tax on sales. He's collecting from, let's say he's selling to Y. He's collecting tax on sales from Y, 100 rupees. Now, second, this is tax on sales. But Mr. X, to make the sales, he has to make some purchase as well. Correct? Make the sale, he has to make some purchase as well. Therefore, tax on purchases, let's assume, whatever purchases he has made, various goods he has purchased, various services he has purchased, all these purchases, let's assume the tax he has paid on his purchases, let's say comes to 80 rupees, right? Now, how much exactly should Mr. X pay to government? Mr. X, how much should he pay to government? Please note, my dear friends, he is collecting 100 rupees tax on his sales. Now. He will not pay this entire 100 rupees tax on his sales to the government. Why? Because please note, my dear friends, out of this 100 rupees tax he has collected, already 80 rupees he has paid as tax on his purchases. Therefore, already 80 rupees has been remitted to the government. Right? So, because he has paid this on his purchases, therefore, balance 20 rupees only Mr. X will pay to the government. Are you with me? Therefore, this is the concept of a value-added tax system. Value-added tax system is very simple. Now, what is value-added tax? Very simple. Now, value-added tax means, the word value-added means nothing but what? Sales minus purchase. Is it right? Same way, value-added tax means nothing but tax on sales minus purchase. Very simple. So, the word value-added means nothing but what? Value-added. What does it mean? Nothing but sales minus purchase. Correct? So, same way, value-added tax means nothing but the tax is levied on the value-added. Sales minus purchase. That is why, in case of a value-added tax system, the tax on sales, against that, the tax on purchases, it is netted off. Therefore, net tax is being paid only on this particular sales minus purchase, value added, only on that tax is being paid. Are you clear? Therefore, please note, my dear friends, this is the concept of a value added tax system. The tax on sales, just like how for value added, we net off sales and purchase to find out the value added margin or the profit margin we used to say. Na? Same way, for a value added tax, we find out the tax on sales minus the tax on purchase, that is the tax on value added. We find that out. So this is the value added tax concept. Now, why am I saying this? Now, please note, my dear friends, because GST is a value added tax system, because of that reason only, this tax on purchases is allowed to be, in our example, 80 rupees. It is allowed to be set off. Because GST is a value added tax system, because of that only, this tax on purchase is allowed to be set off. This 80 rupees is allowed to be set off against 100 rupees. Are you with me? That is why it is called as credit. That is why it is called as what? Credit, because it is given as a credit to the Mr. X supplier in this particular case. Against the entire liability of 100 rupees, he will not discharge that one. Against that, he is given a credit of 80 rupees. He is given a credit of 80 rupees, balance 20 rupees alone he remits to the government. That is enough. Are you clear? That is why this tax on purchase is called as credit. Not only it is called as credit, it is called as input tax credit. Are you with me? That is why it is called as input tax credit, because the tax paid on purchases, the tax paid on input, that is what is given as credit. That is why it is called as input tax credit. Are you clear? Right. So this is the entire introduction as to input tax credit. Now, Kirtika, what are you not able to understand? Can you tell me? I'm not clear with this. What exactly is your question? Can you please tell me in chat? Because this is the basic. If you don't understand the basic, there's no point in discussing the others. So, Kirtika, tell me, what are you not clear with this?
Sir, I'm not understand about the example what you told for this.
What exactly in the example are you not able to understand?
That 80 rupees, yes, 100 rupees, 20 rupees.
Okay. See, this 100 rupees, X is selling to, let's say, some person Y. Okay. So on his sales, he is collecting a tax of 100 rupees. GST is collecting 100 rupees. He is collecting. Okay. Now let's assume. So this is transaction X is selling to Y. This tax on sales is nothing but tax collected by X from Y. Are you with me? Tax collected by X from Y. But for X to make the sale to Y, X has to purchase something. Na? Let's assume X is purchasing from A. X is purchasing from A. After having purchased only, he can sell to Y. Na? Therefore, X is purchasing from A. X is paying to A on his purchases. X is paying to A tax. He has to pay GST, just like how X is selling to Y. On that sales, GST has to be paid. Now, similarly, when A is selling to X, he has to levy GST and X has to pay that one. Therefore, when A is selling to X, let's assume X is paying a tax of 80 rupees on that very same product. Sir, why sir, X is paying to A 80 rupees only, but when X is selling to Y 100 rupees, sir, that is the value addition. Okay, X will purchase from A for, let's say, 8,000 rupee, or let's say 800 rupee, he will pay a tax of 80 rupees. But when X is selling to Y, he will add his profit margin. He will sell to Y for, let's say, 1,000 rupees. Therefore, he will collect a tax of 100. Are you with me? Therefore, when X is selling to A, he is collecting a tax of 100. Same X, when he's purchasing from A, he's paying a tax of 80 rupees. Are you able to follow? That is why I'm saying from X perspective, the 100 rupees is the tax collected on sales. The 80 rupees is the tax paid by X on his purchases. So therefore, that 100 rupees, whatever tax collected on sale, against that one, he has to pay to the government. That 100 rupees X, it is not his income because that is tax collected. Therefore, X has to pay to the government. But he will not pay the entire 100 rupees. Why? Because already X has paid to A. When he is purchasing from A, he has paid already 80 rupees tax he has paid. Already that tax would have reached the government. Therefore, the 80 rupees can be set off. Balance 20 rupees alone. Out of that 100 rupees, 80 rupees is allowed as credit. Balance 20 rupees alone. If X can pay to the government as GST, that is enough. So this is the concept of the value-added tax system, wherein on the tax collected on sale, the tax paid on purchases is allowed to be set off. Just like in our example, against 180 can be set off. Similarly, any tax paid on purchases can be set off against the tax paid on sales, and the balance tax alone, if you pay to the government, that is enough. So this is called as the value-added tax system. This is how it works. Not only GST, but across the world, any value-added tax system, this is how it will work. Therefore, in this three-step calculation, the second step, the tax paid on purchases, that is exactly called as input tax credit. That is what we are going to be discussing in the next 1.5 hours. So I hope you are clear now, Kritika. So this is the concept of an input tax credit. Now, having seen that one, now please tell me the answer, my dear friends. Next question. Therefore, please tell me this tax paid on purchases, this is nothing but what is called as input tax credit. The tax paid on purchases is nothing but what is called as input tax credit. Are you with me? Now, therefore, please tell me, when we are talking about input tax credit, what are we talking about? Are we talking about the sales or are we talking about the purchases? Please tell me the answer in chat. Again, I want to know everybody is understood or not. Therefore, please tell me the answer in chat. When I say the word input tax credit, what am I talking about? Am I talking about your sales or am I talking about the purchases? Umadevi, sales. Sairam, Umadevi, purchase. Sairam, you're saying sales. Please note, my dear friends, next to one, it's purchase. Prithvi, Kritika, purchase. Good. Therefore, please note, my dear friends, next to 1.5 hours or so, when we talk about input tax credit, please note very carefully, forget your sales. Forget the sales. We are talking completely only about the purchases. We are talking only about the purchase because it is input tax credit now. Second step of the calculation, right? So tax paid on purchases, purchase side alone, we are going to look at that one. Therefore, please imagine a T-shaped profit and loss account. Which side of the profit and loss account are we going to discuss? We are not going to discuss the right hand side. Sales side we are not going to discuss. Income side we are not going to discuss. We are going to discuss the expenditure side. Are you with me? Are you clear? So this is the first thing that you have to know, because till now, whatever we have discussed in the last 1 week or so, you would have discussed completely about the sales side. This income liable or not? I am getting this income liable or not? This sales, is it liable or not? Taxable sales, exempt sales. Everywhere you would have seen income. Everywhere you would have seen the word sales. But now in this session, we are going to be talking completely about the purchases and the expenses. Are you clear? Therefore, please keep that in mind. This session, input tax credit, is completely about the expense side or the purchase side of your profit and loss account. Okay. But please tell me, we are not dealing only with profit and loss account now. We are also dealing with balance sheet. I will tell you why. Now, please tell me, my dear friends, please tell me the answer in chat, because the foundation will be very strong. I cannot discuss the provisions without your foundation being very strong. Therefore, I don't mind spending here another 5-10 minutes on the foundation. Please tell me, my dear friends, when we talk about the expense side or the purchase side, what all expenses could be there for an entity? You please imagine. What all expenses could be there? You all of you have studied cost sheet. All of you have studied profit and loss account, expenditure, so on and so forth. All expenses related things you have studied. Now, please tell me, what all expenses could be there? Imagine. And please tell me, expenses, I don't want the lister. I just want you to imagine. Tell me the answer, broadly speaking. What all the various groupings that you can take of the expenditure? That is, when you say expenditure, broadly, how can you bifurcate the expenditure? Can you please tell me? There are broadly two broad bifurcation of expenditure. Two broad bifurcation is there. Can you please tell me what those are? When I say expenditure, sir, two categories are there, sir, broadly speaking. Can you tell me what that is? What are the two basic nature of expenditure, direct and indirect? Any other? Even direct, indirect, it's a sub-classification only. But first answer I got is correct, Shashwat. Revenue and capital. Perfect answer. Perfect answer. Revenue and capital. Now, Shashwat, can you please, your answer is right, but can you tell me the correct name for it? Revenue expenditure, what do we call it as? Capital expenditure, what do we call it as? We are now using the accounting terminology. But from economic terminology, can you say revenue and capital expenditure? Right, you are right. But can you give me another name for it? From the economic perspective, we call it as current expenditure and capital expenditure. We say that. So current expenses and capital expenses. This is the broadest classification of all the expenses. Therefore, please note, my dear friends, now we are going to be looking at, just a second. Now, we are going to be looking at the expense side. Now, expense can be broadly classified into current expenditure and capital expenditure. Okay, now current expenditure, please note, my dear friends, again, we can bifurcate into two. And now I am going into GST law. From GST law perspective, current and capital expenditure can be bifurcated again into two. What are they? Current expenditure can be on goods. Current expenditure can be on services as well. So goods and service both can be there. Do you agree? Same way, capital expenditure also there can be goods. Capital expenditure also there can be service. Is it right? Can it be possible? Now, therefore, please tell me, my dear, very much possible. I myself will give the answer. Very much possible. It's a rhetorical question. Therefore, please tell me, my dear friends, in current expenditure, what all goods related expenditure can be there? Can you please give me some examples? Now you give me examples. Current expenditure, goods related expenditure. Can you please tell me the answer in the chat? Current expenditure, which are related to goods, goods related current expenditure. Can you give me a few examples? Please tell me in chat. Think. Carriage is it goods or service, ma? Kirtika. Carriage means you're hiring a lorry or something. It's a service under GST law. It's a service. Okay, so I will put your example. Goods. So all, just a second. So therefore, current expenditure relating to goods, predominantly speaking, purchases, correct? Purchase of raw materials, consumables, etc., etc. Can you agree? Therefore, when I say current expenditure relating goods, all these will come under this bracket. Purchase of raw materials, consumables, etc., so on and so forth, chemicals, so on and so forth. Whatever you want to manufacture the product, everything will come here. Goods related will come here. Whereas service related, as Kritika was saying, carriage will come here. It is not goods, it is service. You're hiring a goods transport vehicle, lorry, or hiring means it is service. Any other? Service related, can you give me a few? So for the want of time, I myself will give. Just a second. Just a second, my dear friends. Okay, so therefore, service-related current expenditure could be carriage, or you think over rent. Any business should have a rent, be it factory rent or office rent. For example, I'm a chartered accountant. I should have an office. I should pay rent for the office. So rent could be one expenditure. Telephone, whatever telephone connection you have, telephone expenditure, so on and so forth. You can imagine. And our once we become professionals tomorrow, professional charges we have to pay. Company has to pay to a chartered accountant, cost accountant, so on and so forth. They'll pay all professional charges. Legal charges will be there. So all these are current expenditure relating to services. Are you with me? Now, next one, capital expenditure relating to goods. Can you give me some example very quickly, please? Because we don't have already a lot of time. Can you quickly? Labor, Shamraj, good. So labor is another example of service-related current expenditure. So capital expenditure, can you quickly tell me? Relating to goods, capital expenditure relating to goods. Quickly, can you tell me? Okay, so fast. Capital expenditure relating to goods. Can you please tell me? Plant and machinery, good. Sashwat, good. Therefore, please note, my dear friends, all fixed assets, plant and machinery, so on and so forth, vehicles, motor car, motor vehicles, lorries, so on and so forth, all vehicles, and furniture, fixtures, so on and so forth. So all these things, etc., whatever you can imagine your balance sheet asset side. So all these will come here, right? So therefore, all your fixed assets, other assets, so on and so forth, these will come under capital expenditure related to goods. Now, similarly, capital expenditure relating to service can be many things like erection, commissioning, installation of plant and machinery, erection, commissioning, installation, so on and so forth. Many services can be there, which are also capital in nature. Are you with me? Now, please note, my dear friends, this is why I'm giving so much of an example is that please understand all current expenditure relating to goods, we will use the term under GST law, we use the term inputs. I want you to remember these terms very clearly. Under GST law, any current expenditure relating to goods, we call it as inputs. Any current expenditure relating to service, we call it as input service. Any capital expenditure relating to service also, we call it as input service only. Okay, so any service, be it current in nature or capital in nature, any service we call it as input service only. Whereas current expenditure relating to goods, we call it as inputs. Current capital expenditure relating to goods, we call it as capital goods. Capital expenditure relating to goods, we call it as what? As the name says, it is capital goods, which means nothing but what capital expenditure relating to goods. Are you with me? Therefore, please tell me, my dear friends, tell me in chat. In GST law, these are the three terms next to 1.5 hours. So this is what we are going to discuss. Only three terms we are going to discuss, something called as inputs, input service, and capital goods. Are you clear? Right? Therefore, this is the three credits you are allowed under GST law. 3 credits are alone allowed. Nothing else is allowed. Input service, capital goods. It has to fall under this definition. Then only it is allowed. Therefore, I have given you many examples for this. Now we will go to the definition. When I go to the definition, please try to correlate. Are you with me? Right. So having seen that, have a look at these 3 terms, my dear friends. Input service, input, capital goods. Okay, these are 3 terms you are going to be seeing. So what is input service? Now I request you to go through the slide once. Just take some 2 minutes time, read through the slide. All these are definitions under section 2 subsection 60, 15 and 19, so on. Please go through the definition once. Quickly go through. Fast read through it fast. We don't have a lot of time today. Just go through it. I will explain it to you. Just go through it. It's enough. Read English. Read English. Okay. Now, I'll explain. Please pay attention. Please pay attention. Now, as the definition goes, input service means any service. Okay. Input service, as I already told you, it means nothing but service, right? So any service used or intended to be used in the course or furtherance of business. The next important word, in the course or furtherance of business. Input means what? As I already told you, input means nothing but goods, right? Other than capital goods, which means what? It is current in nature. That's what we see now. Current expenditure related goods is what is called as inputs, correct? Therefore, other than capital goods. So input means any goods other than capital goods means what? It is current in nature. Current in nature. Therefore, input means nothing but goods other than capital goods, again used or intended to be used in the course or furtherance of business. Third, capital goods means what? It means capital goods also means nothing but goods, right? But which is capitalized in the books of accounts. Are you clear? Therefore, please tell me, my dear friends, capital goods means they are capitalized in the books of accounts means where they will come. Will it come in the profit and loss account or will it come in the balance sheet? Yes, this will come in the balance sheet. Are you with me? So all the assets which come in the balance sheet, capital in nature. So all that is what is called as your capital goods. I have given you many examples: plant and machinery, furniture fittings, vehicles, so on and so forth. So whatever is capitalized in the books of accounts, whatever comes in your balance sheet, that is what is called as capital goods. Are you clear? Therefore, please note, my dear friends, 3 terms you should never forget: input service, inputs, and capital goods. I will also give you a little bit more. I'll explain. But before that, just to analyze further, if you can analyze first service, be it as I said, current in nature or capital in nature, both are coming under input service. Whereas, as far as goods are concerned, if it is current in nature, it comes under inputs. whereas it is capital in nature, it comes under capital goods. Is it right? Therefore, the first definition covers all services, whereas the second and third definition covers goods. Second definition covers all current related expenditure. Third definition, capital goods, covers all capital related expenditure. So please understand this very carefully. So having seen that, okay, these three things are allowed. As input tax credit, you can subtract it from your output liability, from your tax collected on sales. You can subtract all these three things in the second step, as we have seen in the earlier example. You can subtract all these three items, whatever tax is paid on these three items, you can reduce. Okay, but what is the condition? Please note, my dear friends, all these three things, whatever tax you paid on the input service or input or capital goods, whatever tax you have paid on that, you can reduce it. It is allowed as credit, no problem. But the condition is that it must be used in the course or furtherance of business. All the three things will use that word. Have a look at it. Right? Therefore, what does it mean? Can anybody say? Now tell me, my dear friends, I'll ask you a question. If I buy a vehicle, for my personal purpose, or I buy a laptop for my personal purpose, that is, I'm a proprietor, I'm not buying it for my business. I'm buying it for my personal purpose, using it for watching movies, so on and so forth, playing games. For all personal purpose, I'm using it. So so this laptop or vehicle will come under capital goods, correct? But can I reduce the whatever tax paid on this laptop or whatever, can I reduce it against my tax collected on sales? Please tell me the answer in chat. No, it cannot be reduced. Yeah, it will come under drawings, you're right. But as far as GST is concerned, can I reduce it and claim it as ITC? No, because as the three definitions says, please note, my dear friends, that's the key thing, most important thing that you have to understand. As the three definitions, they say the word, it should be used in the course or furtherance of business. It should be used for business purpose. If I am using it for personal purpose, then I cannot reduce the tax from my tax collected on sales. I cannot reduce this as input tax credit, right? It is not allowed. Therefore, please note that very, very carefully. This is the most important thing. All the items, whatever tax I pay on my purchases, I can reduce it as long as it is used in the course of business. If I am using it for personal purpose, then I cannot reduce it, right? Therefore, please note that very carefully. Now, having seen that, so these three definitions, please remember. Now, I have given a small flow chart here. Now, one more question I'll ask you before I go forward. One more question I'll ask you from the earlier slide. Now, please tell me, my dear friends, now I told you that in this session, we are going to be discussing about expenditure only, not about the income, not about the sales. We are going to be discussing about the expenditure. Correct? Therefore, when you look at a transaction, therefore tell me, if I am talking about expenditure, means from whose point of view I am talking about? Am I talking about from the seller's point of view, or am I talking about from the recipient's point of view? Am I talking about from the supplier's point of view, or am I talking about recipient's point of view? Whenever I say the word input tax credit, from whose point of view am I discussing this? Can you please tell me the answer in chat? When I say input tax credit, who am I talking about? Input tax credit for whom? Input tax credit for the supplier or the recipient? Supplier. Everybody is saying supplier. Now, please note, my dear friends, recipients. Ashwath, you're right. Your answer is right. Now, please note, my dear friends, when I say the word expenditure, you take various expenditure that you have given. Purchases, carriage, rent, correct? Whatever expense you have said, plant and machinery, I'm purchasing. You have said you are purchasing all that, correct? So when you say you are purchasing all this and paying the expenditure, whose point of view are we talking about? In the item eligible, not eligible, we have seen now. Whose point of view are talking about? From the purchaser's point of view, correct? Very simple. We are talking about expenditure. Expenditure from whose side? From the purchaser side only, my dear friends. Are you clear? Therefore, please note, whatever expenses you have said, purchases, raw material, consumable, rent, carriage, plant and machinery, vehicles, everything you are purchasing. Therefore, we are talking about from the purchasers or the recipient's point of view. So please keep these things in mind, because till the last session, you are talking about the income. You are talking about the sales. Therefore, you are not talking about from the supplier's point of view. Are you clear? Whereas in this input tax credit, we are not talking from the supplier's point of view. We are talking from the recipient's point of view, because we are talking about the expenditure. Okay, so please understand this also very, very carefully. So having seen that, therefore, whether recipient, that's what is given in the slide, have a look at it, whether the recipient, can I take ITC? Can I take ITC in the second step? Whatever tax paid on my purchases, can I reduce it? Can I claim ITC? For that, what are the criteria? Have a look at it, my dear friends. First, the recipient should be registered. Okay, if the recipient registered, then he can avail, whereas recipient unregistered means ITC he cannot reduce. Right? Therefore, recipient is registered. Yes. Then second, one more thing you have to see. So if this is yes, tick. Then one more thing you have to see, whether it is in the course of business or not. Whether it is for the purpose of business. This also should be yes. This also should be yes, then only ITC is eligible. Are you with me? Whereas if it is for other purpose, now what is the meaning? If it is for personal purpose, as I said, laptop used for watching movies, laptop used for playing games, all those ITC I cannot reduce in the second step. Therefore, whatever a recipient is procuring various things for other purpose, personal purpose, then it is not eligible. Or if the recipient is unregistered, here also it is not eligible. Therefore, in both these cases, it becomes not eligible. Right? Therefore, my dear friends, you just remember one line. This is a flow chart I have given, but you just remember one line. Okay, that line you remember for whether I am eligible to ITC or not. That one line you remember. That's enough. ITC is eligible for a recipient who is registered, or we'll say like this: ITC is eligible for a registered recipient. ITC eligible for a registered recipient using for business purpose. Okay, I'll repeat. ITC eligible for a registered recipient using for what purpose? Business purpose. Then only ITC is allowed. Are you clear? Therefore, you remember this one line. Therefore, what we can say, the recipient registered, yes. Using for business purpose, yes. Then only ITC is eligible. First step, if the IT recipient is not, if the recipient is unregistered, then straight away gone. First step itself, it's gone. Whereas the recipient registered also, what purpose he is using, other purpose or personal purpose, then also no. Okay, therefore, please remember this, a registered recipient using for business purpose, then only ITC is eligible, right? So please keep these things in mind. Now we'll be seeing, so for claiming this ITC, for reducing this ITC in the second step, 3 steps. Now please note, my dear friends, from now onwards, I'll be referring to step 1, step 2 like that. What is the meaning of that? Very simple. So just keep this example in mind, okay? Tax collected on sales, 100 rupees, that's the first step, whatever amount. Tax collected on sales, the first step. These are all some problems, either for your college level or at professional level also, all problems relating to GST, these 3 steps only will follow. First thing we'll see on sales, what tax we are collecting. First step. Second step is this input tax credit. What tax we are paying on purchases, be it current expenditure or capital expenditure. That is second step, that can be reduced. 80 rupees in our example can be reduced. Balance is the net tax payable to the government. So these 3 steps I'll be saying. Therefore, whenever I say step 1, step 2, step 3, don't get confused. These are 3 steps I'm saying. So mostly we'll be focusing on the step 2. Okay. What I can reduce, what I cannot reduce in the second step. That is what we are going to be focusing on today. We'll see many examples. For example, we'll see passenger transport vehicle, now you can't reduce. Whereas goods transport vehicle, now we can reduce. Like that, I'll give you many examples. Okay, so predominantly we'll be talking about the second step only. Therefore, whenever I say step 1, step 2, step 3, don't get confused. This is what I'm talking about. Okay, so having seen that, so recipient, registered recipient using for business purpose, then only second step we can reduce the ITC. Now, what is input tax credit? Now, please note, my dear friends, already, so time for question. Already in the earlier sessions, you would have seen the various types of GST. Correct? Can you please tell me in chat? Now time for answering. Can you tell me the various types of GST that you have come across in the earlier sessions? What types of GST? What are the various types of GST? Okay, there is central GST, good. Apart from that, Cgst is there. Please tell me. I want answers. Cgst, SGST. Okay, IGST then UTGST or UGST, good. So therefore, and is there any other thing apart from this? Under GST law, is there any other thing apart from this? Any other type of GST or any other type of levy compensation cess, have you seen? Yes, good cess. Therefore, these are the various types of GST. Therefore, my dear friends, please note, I'll come back to the first example again. Now, in the first step, come back here. In the first step, this tax on sales could either be Cgst, SGST, UGST, IGST, so on and so forth. It can be anything. So, because GST is of these various types, intra-state supply, either Cgst, SGST or Cgst, UGST will be there depending on state or union territory. Whereas if it is an interstate supply, IGST will be there. Therefore, the first step, tax on sales could be C, S, U or I. It can be anything. Correct? Now, same way, the input tax credit, second step can also be C, S, U or I. Cgst, SGST, UGST or IGST. It can be anything. Now comes the question, sir. In the second step, you are saying you can reduce, okay, ITC, but what I can reduce against what, sir? Can CGST, can I reduce against only CGST or can I reduce against SGST also? Can I reduce against UGST also? Can I reduce against IGST also? What I can reduce against, sir? What is the order in which I should go? Same question for all the other three things as well. What tax I can set off in the second step? What tax I can set off against what tax in the first step? That we have to know, and what order, what priority. We cannot follow any order that we like. Law says there's a certain priority. Section 49, A, B, so on and so forth, and Rule 88A. Right, so all these provisions are there. It says that there's a method of set off. You have to follow that only. So, having seen that, that is what is this discussion, my dear friends. Have a look at it. So, what is input tax credit? It's nothing but CGST, SGST, IGST, UGST on normal forward charge basis, FCM forward charge mechanism, or reverse charge basis, or in case of imports, IGST only will come. So, IGST on imports, so nothing but CGST, SGST, UGST, or IGST as the case may be. So, input tax credit includes all these things, but input tax credit excludes composition levy. Now, I think you have come across this already. Can somebody please tell me in chat, composition levy means what, and what is the tax paid? What percentage of tax paid? What is the rate of tax under composition scheme? Can you please tell me in chat? Composition levy we have seen already. Definitely you would have seen in the earlier sessions. So, composition levy means what is the rate of tax under composition scheme? Please tell me the answer in chat. Have you seen this already? Definitely you would have seen, because I have seen your portion. Tell me, what is composition levy, or just tell me what are the rates of tax under composition levy? That's enough. Anybody? No answers. 0.5. Sir, I'm saying 0.5. Any other answer? Any other answer? Is there any other rate of tax? Okay. So I'll for quickly going across. Please note, my dear friends, composition levy or composition scheme is under Section 10. It's a separate scheme. Concessional lower rate of tax is being given. If you satisfy certain conditions as under Section 10, then the we call him as a composition dealer. So he will be given a concessional rate of tax. So Sairam said 0.5. Yeah, small taxpayers. Good. For a small taxpayers, then turnover anybody, anyway, I myself will answer. If your turnover is less than 1.5 CR, less than equal to 1.5 CR in a particular financial year, then you are eligible to composition scheme. And there are many other conditions as well you have to satisfy. So a small and medium taxpayers, we can say 1.5 crore small taxpayer are definitely nowadays 1.5 crore turnover is nothing. Right? Therefore, small taxpayers, they are given a concessional rate of tax. Normally, the rate of tax is 1%, 5%, broadly speaking. In case of services, certain specified services, 6%, so on and so forth. They are given a very low rate of tax. GST normally we have seen 12%, 18%, 28%, like that the rate of tax is there. But if you are under composition scheme, then a very lower rate of tax is given considering the smaller taxpayers, 1%, 5%, 6%, so on. Sairam said 0.5. Please note, Sairam, it's 0.5 CGST means 0.5 SGST also. So 0.5 plus 0.5, 1% you should say as the full rate of tax. Okay. So therefore, these concessional rate of tax are there. Please note, my dear friends, if you are buying from a composition dealer, that is, now we are not talking about the seller. That's why I told you, be very clear. When we talk about input tax credit, we are talking about, let's say that Mr. X is there. Mr. X, second step, he is buying from A now. That's what we saw in our example now. So here in this transaction, X is a recipient. So let's assume A is a composition dealer under section 10. He is charging, let's say, 5% on a particular service. He is charging 5%, let's assume. For example, restaurant service comes under 5%. So he is charging 5% to Mr. X. Can Mr. X claim it as ITC? Can he reduce it in the second step? Answer is no. Mr. X cannot reduce it because already composition scheme, the rate of tax is very low. It's hardly 1%, 5%, 6% like that. Again, if the government gives the ITC, allows Mr. X to reduce this, then it will be nothing. It will be a loss for the government. Therefore, that is the reason behind this. Therefore, if I am purchasing from a composition dealer, here Mr. A is a composition dealer selling to Mr. X. Can Mr. X claim the ITC? Can the recipient claim the ITC? Answer is no. Whatever that 1% or 5% or 6% tax paid to a composition dealer, that cannot be reduced as ITC by the recipient, right? So that is what is given there, my dear friends. Very important point, especially in exam point of view, they can test this one. So having seen that, okay. Now coming back to the point, as I said, please note, my dear friends, in the first step, either you can have the tax GST as Cgst, SGST, UGST, or IGST. Same way in the second step, input tax credit. First step, tax on sales could also be this one. Second step, the input tax credit could also be Cgst, SGST, UGST, or IGST. So what I can set off against what and what order, that we have to discuss now. That is there in the next slide. Have a look at it, my dear friends. Right, so what is the order of set off? Okay, so have a look at this flow chart. Now, for understanding this flow chart, now please keep this in your mind very clearly and pay attention very carefully, or else you will completely miss this. Now pay attention. In this diagram, the left hand side, whatever is given here are the inputs or the input tax credit, we can say, okay, or the input tax credit, which means in our three-step working, it is a second step. It is a second step. Are you with me? Now, right hand side, whatever is given there, these are the output and sales, tax collected on sales in Bathonla. So it is the output. Sales, not nothing but output, both are one and the same. So it is the output. Right, so in our three-step working, it is nothing but step number 1. Okay, so I'm just writing it as 1. Therefore, what tax in step number 2, ITC, what ITC in step number 2 can be set off against what tax in step number 1, that is given in this slide. For that, please understand, in this diagram, left hand side is step number 2, ITC. Right hand side, whatever is given there is step number 1, tax collected on sales or output tax. Okay, first we will come to the ITC of IGST. IGST ITC can be set off against what? Please note, my dear friends, IGST ITC, pardon, just a second. Just a second, my dear friends. Pardon. So IGST ITC in the step number 2 can be set off against what in step number 1? First, IGST ITC should be set off against IGST if this is there in step number 1. Are you clear? So that is what we used to say. Always do the intra-head adjustment. IGST, first you set off against IGST output. IGST input, you set off against first IGST output. Are you clear? First intra-head only you should do. Then you can set off. So this is the first priority. Then second priority, please note, my dear friends, either you can set off against Cgst or SCST or SCST and next to Cgst, or partly Cgst, partly SGST also. Any order you can set off. Okay, I'll give an example. Let's assume in the second step, IGST input is, let's say, 80 rupees. Let's assume. The IGST output in step number 1 is, let's say, 50. And Cgst is 30. Cgst output in step number 1. SGST output in step number 1 is 20. Okay, let's assume this as the case. Therefore, now step number 2, the total is 80. Step number 1, the total is 100. Breakup I have given. Now, how can this 80 rupees be set off? Please note, 80 rupees first should be set off only against this 50. It should be knocked off against this. Are you with me? Then balance, how much will remain? After setting off 50 rupees, balance 30 will remain. Is it right? In step number 2. That 30, how you can set off? Please note, my dear friends, you can knock it off completely against this 30 of Cgst and nothing against SGST. Or, so this is one method. Completely 30 you can set off here, nothing here. or second, this first method. Second method, 20 here because output is only 20. So therefore 20 here, balance 10 here. Whatever remaining is there, 30, 20 gone, balance 10, you can set off here. Or third one, whichever way I want, I can do. Partly against this, partly against this. Sir, always Cgst, SGST equal only now. So now I have 30 in my balance. So I will set off 15, 15. Okay. So therefore, either first set off against balance, first set off against Cgst, then against SGST, or first against SGST, then against Cgst, or half and half, or whatever manner you want. Any way you can do. Right? So this is how you set off the IGST, which is there in IGST ITC, which is there in step number 2. Are you clear? Right. So this is the first one. Anyway, we'll see one more example I would want you to answer. I'll give one example I want you to answer. Now, next one, coming to the CGST, which is there in step number 2. Can be first set off against CGST, which is there in step number 1. CGST input, first set off against CGST output. Then balance, if any, only against IGST output. Then same way, SGST output, first against, SGST input, first against SGST output, then balance, if any, only against IGST output. So this is the slide. Now, slide, once you see the slide, immediately you can tell me a few easy answers. Now, we have seen, my dear friends, in this slide, what input what can be set off against what output. What input in step number 2 can be set off against what input, what output in step number 1. Okay, we have seen this. But can you tell me in chat, what input cannot be set off against what output? Can you please tell me that in chat? Now, please note, Shamraj, CGST, SGST always charged equally. Now, I'm not talking about charging now. Charge will always be equal. But I'm saying how the IGST amount which is there in your step number 2, how will you adjust against CGST, SGST which is there in step number 1? So in any manner that you can adjust, that you need not do equally, that you can adjust in any manner. Now I'm not talking about charging, I'm talking about adjusting. Please be very careful. So leaving that aside, can you please tell me the answer in chat? In that chart you have seen what can be set off against what. What tax in step number 2 can be set off against what tax in step number 1. But can you please tell me what cannot be set off against what? What tax cannot be set off against what? Can you please tell me? If you want to observe the slide once again, what tax in step number 2 cannot be set off against tax in step number 1? Please tell me the answer in chat. SGST against IGST can be done, Nama. Have a look at it. Kirtana, SGST can be done against IGST, no problem. So what tax cannot be set off against what tax? Please note, my dear friends, if you observe this very carefully, here I have said come to CGST now. CGST desire in step number 2, I have said you can adjust against CGST desire in step number 1 or IGST desire in step number 1, correct? But what about the other? Can I set off CGST against, in step number 2, CGST is there, can I set off against SGST in step number 1? This is first question. Second question, SGST in step number 2, can I set off against CGST in step number 1? Are these given in the slide? You cannot set that off, correct? So therefore, please note this very carefully, my dear friends. These two things are not possible. That is CGST against SGST and SGST input against CGST output. You cannot set it off. I used to tell my students commonly like this. How can I remember, sir? Very simple. CGST is center, SGST is state. In India, center and state will never agree. Therefore, CGST cannot be set off against SGST. SGST cannot be set off against CGST. Center and state will never agree. That's how I tell my students, this is how you remember. Right? Therefore, please remember it. If you can remember the chart, it's good. Otherwise, you remember like the center and state will never agree. CGST cannot be set off against SGST and SGST cannot be set off against CGST. This is how you remember. Are you clear? Now, please note, my dear friends, this chart, I want you to by heart. I want it by heart. Why? Because you cannot change the order. Unless it is this IGST, ITC, this two things, IGST set off against CGST and SGST output, that alone you can do in any method you like this. Any method you can adjust. But other than that, you cannot change the order. You have to come only in this order. Like this only you have to come. That is, first I have to use IGST only in step number 2. Are you clear? I have to use the IGST input only first. Then only I can come to CGST input. Then only I can come to SGST input. In this order only I have to come. Sir, can I use CGST input First, in step number 2, answer is no. Can I use SGST input first? No, you cannot do that. First, in step number 2, you have to use only IGST input. So IGST first always. Then only you can come to CGST. Then only you can come to SGST. In this order only you have to go. In this order only you have to use the input. Same thing as against adjust against the output. You have to come in the same order. For example, CGST you are coming. First you have to set off against CGST output only. Then only you can set off against IGST output. Same way SGST input also. First against the same head, SGST output in step number 1. Only against that you can set off. Then balance, if any, only can be set off against IGST output. Are you clear? Therefore, if you are clear, good. Otherwise, just by heart this table flow chart. Same order only you have to go. You cannot change that. I'll tell you very easily how to remember. First, always IGST. As far as the input is concerned, in step number 2, first always finish the IGST. Then only come to CGST. Then only come to SGST. You have to come in this order only. Okay, I, C, and S. In this order only you have to use the input. And first let's come to IGST input. How you have to set it off? First only against that intra head. IGST input first against IGST output. Then only against CGST, SGST, but that you can change. CGST, SGST order of set off you can change. Next come to IGST input. That you can first set off against, second come to CGST input. That you first set off against CGST output, then only you can set off against IGST. You cannot set off against SGST. Same way SGST input, come to the third. First you set off against that output itself. SGST input first against SGST output, then you can't change. Then only balance, if any, can be set off against IGST output. So in this order only you have to go. You cannot change this order in any problem that you solve. You cannot change this order. Are you clear? We'll do one sum. You should be clear, right? I'll take a problem. So quickly, let's do one problem, right? I want you to tell me the answer. Okay. So I have 3 problems, but for want of time, we'll take the second problem. Okay. So have a look at this, my dear friends. The output is given nothing but first step. The input is given nothing but second step. So you have to find out third step, how much net tax payable. 3 steps always. Simply GST finish off in 3 steps. First to find out tax collected on sales output. Second, how much input tax rate, ITC you can set off. Second step. Third step, how much payable. But here, as I have said, all the 3 taxes are given. C, I, C, S. All 3 things are given. So how to set it off? That's the question here, right? Now, I'll give you a small format because otherwise, if you just imagine, sir, draw lines, say, exam will be doing karate. This you have to set off like this, like that. You'll be doing karate. So therefore, don't do karate in exam hall. I give a format. You follow that format, you will get the answer. Okay. So we'll put a matrix. Matrix, max, avana, sir. We are not in max. I'm just saying matrix means a table. Okay. Let's say a table. We'll put a table. Okay. We'll put a table. So just ignore this. We'll put a table. So here we'll take the input in the column. Always write in this order. Now please tell me, remember that flow chart and tell me input which order you should set off. First any input you should take. Remember that flow chart and tell. Can you please tell me the answer in chat? What is the order? CSI, ICSR, you just tell me in simple 1 letter you finish off. IC and S only have to go, okay? Therefore IGST first. Then as far as the input, second step is concerned. Now we are talking about second step, but I'm not putting it as step 1, step 2, and step 3. I'm putting it as a table, okay? So just try to visualize. Then CGST, then SGST. You take it in the column. In the row, you take the, after that you put one small thing, and here you take the output. In this last row, you take the output. Output IGST, CGST, SGST, total you take. And here you are going to take the set off. So you follow this format. Okay, now you please tell me, have a look at the question. Output, let's take it, fill it up in the last column. So output IGST is given as 5 lakhs, CGST 3 lakhs, SGST 4 lakhs. Now I want everybody, you have a note, you should ideally have a note and pencil with you now. So can you please take it and solve this question along with me? I want you to tell the answer. I will not do this. I want you to tell because I spent a lot of time explaining that. So I want you to try. Okay, so the output is given 5, 3 and 3, 3, not 4, 3. Output is given. Now come to input 10, 4 and 4. So here you take it within bracket 10, 4 and 4. So 10, 4 and 4. You just copy it in the columns. First, second and third columns. Okay. Now, I'll give the format, you tell the answer. So this is the input, my dear friends. All these three are the inputs. Okay. Now, how this input is set off? Right. So therefore, first one, write down set off against, or can I, okay, no issues, I've written set off against first one, IGST. Then point number 2, set off against CGST. Set off against SGST. You have to do these three things. Okay. For example, first one I'll do. Then you try to do. Now, first tell me this input of 10 lakhs IGST. We should do this only first enough. We should set off IGST as per that diagram. That would tell me how this will be set off against IGST output, CGST output, then SGST output. 3 steps you have to allocate. Now, please tell me. First, IGST input against what output you will set off? Please tell me in chat. IGST. Good. So, first IGST against this only you have to set off. In this column, you have to fill up. Are you with me? So, IGST against this IGST. So, in this column, you have to fill up. So, how much? Please note, output is itself 5 lakhs only. Input is 10 lakhs is there. Therefore, till the extent of liability only we will set off. So, maximum 5, allocate only 5. More than that, we cannot allocate because liability itself is only 5. Credit is 10. Okay. So, balance 10 input. Now 5 allocated, balance 5 is there. You have to allocate it these two things, CGST and SGST, correct? So 10, 5 gone, balance 5 is there. Now tell me how this 5 can be allocated. Please note, my dear friends, you can allocate it as 3, 2, 1, 4 or 3, 2, 4, 1, whatever, or 1, 4 or 2, 3, any which way you can, or you can allocate equally also. Right? So therefore, balance 5 is there. Let me allocate equally. 2.5, 2.5. Can you allocate like this? There are multiple answers to this question, my dear friends. We are making an assumption that balance IGST is allocated equally. Right now, you please tell me the answer. That's it. So for, I myself have done most of the equation. Now, balance answer you tell me. You finish off this table and I will ask you questions. You tell me that. You finish off the table. Correct. I have myself done the question. Right. So honestly, think over how many of you got the same answer. Right. Now I'll explain, my dear friends. Now tell me the answer one by one. So first column I have explained. Now second is CGST input allocation. Now CGST input is 4. How to allocate? Now please tell me, my dear friends, can CGST input be set off against SGST output? Answer is no. You can't set off now. Therefore, here you directly put an into. CGST input can't be set off against SGST output. Center and state will never meet. Therefore, put an into. Not possible. Now, CGST input, can I set off against the IGST output? Here, can I set off? I can set off, no problem. But already IGST output 5, already I have allotted 5, no more payable. 5, you have set off the ITC of 5, therefore no more payable. Therefore, even though it is possible, you will not allocate. Put an into here also. Therefore, now you come this against this alone, you can allocate. Already out of total 3 liability, 2.5 already allotted. Therefore, balance 0.5 only you can allocate here. So 0.5 allocate. So what will happen, sir? Total 4, sir. You have allocated only 0.5, sir. What about the balance 3.5, sir? Please note, my dear friends, this 3.5 will be carried forward to the next month. This is called as ITC carried forward, right? So let's say assume this is month of August, it will be carried forward to September. Balance. Okay, same way here you come, SGST, come to the last row. So this is over. So come to the last row, SGST. SGST can't be allocated against CGST. Here put it into. It can be allocated against IGST, but you will not allocate because already IGST 5, you have allotted 5. Therefore, no more balance here also put an into. Not possible. Therefore, SGST against SGST only you can allocate. So 3 total liabilities are out of which 2.5 already allotted, therefore balance 0.5 here also. So you'll allocate that one. That's it. So 5, 0.5 and 0.5, this is the allocation here. Right, therefore here also if you look at it, SCST total 4, 0.5 only allocated, balance 3.5 you will carry forward. Are you with me? Yes, yes or no? Followed, not followed? Yes or no? Please tell me the answer in chat. And also honestly answer. Honestly answer, how many of you tried and got the same answer? Anybody tried and got the same answer? Tried, not got the answer, different answer. Please note, my dear friends, different answer are possible. Okay. Right. So this is the way in which you have to do. Okay. So Sashwatji, what exactly are not able to understand? You please tell me. You have not got the answer. That's okay. See, you can make mistakes. That's not an issue. Have you understood or not the allocation? If not, we'll do one more problem. And you are going to do that problem. I'll keep quiet. Tried. Everybody tried. Good. Not got the answer. But have you understood? Not got the answer is okay. Have you understood? Or else we should do one more problem. Understood or not? Understood or not understood? Could not understand. Okay. What exactly could you not understand? Can you please tell me so that we'll explain it once again and we'll do one more problem also. We'll do one more problem. But I want Sashwat to tell me what exactly were you not able to understand. It's a complete hour. Complete hour board, sir. What exactly you do not understand? Please tell me. I'll wait for your chat. Okay, anyway, so we'll do one more problem then. Because if I don't know what you didn't understand, how are you allocating 5 lakhs in Cgst and SGST? Okay, so that's what you're saying. Your concern is about this one, this allocation. Is it right? Right. So I'll explain this once again. Okay. Now pay attention, sorry, everybody else as well. So total, have a look at this question, my dear friends. Input, we are filling it up here, 10, 4 and 4. Now we are allocating this 10 of IGST. As we already seen, IGST of 10, first you should allocate against IGST, then against CGST and SGST, pardon. Then against CGST, SGST in whatever order. Okay. So first come, output is also there. 5, 3 and 3 we are updating here. Okay. Now first allocation of this 10 against this 5, 3 and 3, how to allocate? First 10 IGST. IGST input first again adjust against IGST output. IGST output is 5 only, correct? Even though we have 10 in our hand, we cannot allocate the entire 10 because output of IGST itself 5 only. Therefore, out of 10, allocate only 5. Balance how much? Balance 5. Okay. Balance 5, you can allocate against CGST first, then against SGST, or SGST first, then against CGST, or equally, or whatever manner you like. Anyway, you can allocate. But we have taken 5 will be allocated equally. Okay, therefore 5 half 2.5. Out of this 5, another half 2.5. So out of 5, half each 2.5, 2.5. We are allocating to CGST and SGST. Is it okay? Yes, it is okay. Because have a look at it. The output of CGST and SGST is 3 lakhs. We are allocating only 2.5 and 2.5. It is within the 3 lakhs only. It's okay. So once you allocate 2.5, then balance 0.5, that is 3. Now we allocated 2.5, balance 0.5 from CGST input. And same way SGST also 3, 2.5 allocated, balance 0.5 from SGST allocated. So total 2.5 plus 5, plus 0.5, 3 for CGST output. And for SGST output, again 2.5 plus another 0.5 from SGST, total 3. So it is squaring off. And IGST 5 already allocated here itself. 5, 0 and 0. So already allocated, therefore 5 is also getting knocked off. All the 3 output liability we are discharging. So if you see row wise, you have to check whether this 5 lakhs, 3 lakhs and 3 lakhs of liability are getting discharged. You have to see that. Then you have to see column wise. 10, 4 and 4. This much input is there in our hand. This much input is there in our hand. Are we completely allocating? So you have to see that. First come to this IGST 10. You have allocated as 5, 2.5, 2.5, therefore 10. Total has been exhausted. Next to come to Cgst 4. You have allocated only 0.5, therefore balance 3.5, carried forward to next month. Same way Cgst 4 is there in our hand as ITC. You are allocating only 0.5, balance 3.5, carried forward to next month. So this is the allocation. Yes, we'll do one more sum. You are going to do one more sum. Okay, so let's take this. Okay, I'll give a little bit tougher question. Take this. Okay, not an issue. Tougher questions are not here, no issue. So can I do one thing? I'll just erase everything off. Just a minute. Oh, I should also give you a break. Okay. So we'll do this problem. We'll take a short 5 or 10 minute break. Okay. Now take this third question. Second, my dear friends. Third question. Let's take this third question. I want everybody to try in the same format you try. I'll give the format once again. Okay, no issues. Just adjust. So this is the output. This is the input. This set off against I, C, S, I, set off against I, set off against C, set off against S. Okay, so this is the method. So here in this third sum we'll do now, as compared to first one, maybe I think a little bit more challenging. All three are easy, not an issue. So third one we'll say, I'll just fill up the numbers, totals I'll fill up, you fill up the allocation. Okay, so the output is, let's say, 3.75, I, C and S. So I 3.75, C is 3L, S is 3L. Now come to the input, I 2.5, 2 and 2. So I is 2.5, 2 and 2. Okay, that's it. My work is over. Excess output is there means what we'll do, we'll see. That's why I'm giving this problem. Let's do. Okay, now I'll keep quiet. I want just somebody to tell me the answer in chat. First column, you tell me first column, put commas and tell the answer in one single sentence. You tell me first column IGST allocation, how you allocate. You can separate the numbers through 0. Or can you tell me like this? Can you tell me row wise? Because 3 rows you can easily type. Which is better? Okay, you tell me this row first allocation, because then only I can get the answer from you. So this row how allocation first, this row and this row. But you do the allocation column wise. Please don't misunderstand. I wanted to complete the question, or let's keep it very simple. Otherwise we'll get confused. Tell me first column how you'll allocate, second column how you'll allocate, third column how you'll allocate. Because allocation you have to do column wise only. And separate the numbers through comma and tell me the answer in chat. Okay, so tell me in this way. First column how you'll allocate. 3 numbers will come. You tell me the answer in separated by commas. Wherever nil allocation is there, put it as nil or 0. So first column you tell me first. 2.5, that's all. 2.5, 0 and 0. Is it right? Because 2.5 is there. Already allocated against here 2.5 because output 3.75 is there. Here it's input available only 2.5. Therefore, fully you will allocate. What about this balance 1.25? What you have to do, we'll see. But first you finish off this 2.5. So 2.5 here, therefore nothing balance. Here nil, nil. Okay. So 0, 0 or nil, nil or into, whatever you want to put. Second one, tell me. Second column, 0, 0, 2. 0, 0, 2 or 0, 2, 0? 0, 2, Sham, you are right. Kritika, please check. Please note, Kritika, this is CGST. CGST can, first itself you put into here. CGST input cannot be set off against SGST. Same way, third column, SGST cannot be set off against CGST. Therefore, here you put immediately into, not possible. Okay. Therefore, now 2, first allocate against CGST output. So here 3 is available. Therefore, you allocate only 2. So balance 1 liability, sir, what to do? Will come. So entirety you allocate against this CGST output itself. Therefore, here you can't allocate. Nothing is remaining. So therefore, finish off. So here too you can't allocate against CGST. First allocate against SCST 2. Out of 2 you allocate 2 because we have to allocate till 3. 2 you allocate, no problem. Balance 1 we'll see what to do. So 2 once you allocate, that's it, exhausted. This 2 is exhausted. Balance you can't allocate. Very clear? Good. So okay. So earlier answer you have mentioned Kritika. Good. So as long as you get the correct answer, I'm happy. Therefore, this is the answer, my dear friends. First column 2.500, second column 020, and third column 002. This is the answer, right? Sir, now the columns are exhausted. Sir. 2.5 fully allocated, 2 fully allocated. Here also 2 fully allocated. So the columns are fully exhausted. The input is fully exhausted, sir. But if I go row wise, and see, sir, it is not fully, output is not fully exhausted, sir. Excess liability is there, sir. Excess output is there, sir. What to do? For example, have a look at, my dear friends. If you go row wise, first row you go 3.75 is there output, total IGST output. You have allocated only 2.5 input, balance 1.25 IGST output. What to do? You have to pay it through cash. When I say cash, it means e-cash ledger, not your cash. E-cash ledger is there, na? Which means nothing but you will pay it through banking channels. You have to go to portal, pay it through banking channels. You can't use credit. Credit 2.5 only is there. So balance 1.25, you have to pay it through your banking channels. Out of your pocket, you have to pay. This is the third step. Are you with me? We saw 3 steps now. 100, 80, 20 in Patama. The 20, when I said pay to government, you have to pay it through your banking channels. Because only 80 credit is there. Same way here, 3.75, 2.5 only gone, balance 1.25. Third step, you have to pay it. Last sum it was not there, but this sum third step is coming, some number is coming, you have to mention it. Now come to second row, CGST 3 lakhs is there, but you have allocated only 2 lakhs here, therefore balance 1 lakh, what I should do, sir? I should pay it through e-cash ledger. Third, SGST 3 lakhs, 2 lakhs, you have set off, balance 1 lakh. So these 3 things, total 3.25. 3.25 lakhs, you will pay it in step number 3 using your e-cash ledger. E-cash ledger means through your banking channels. Through the GSTN portal, using your net banking. There are many modes of payment, you will see later. Through your banking channels, through GSTN portal, you have to pay this amount. Okay, so this is the answer. Done. So this is a good question. Fine. So we'll do one thing. I'm supposed to give a break also. Time is now in my watch 4:45. Okay, so 4:50. 4:50. Okay, 5 minutes. We'll be back. So you can just, you need not log off or anything, just be there. We'll just maybe turn off your audio and video. 5 minutes, we'll be back. I'll also be back. Then we'll continue. Dear friends, so I hope all of you are back. So, can you please confirm in chat? Am I audible? Yes. Are you back? Am I audible? Yes. So we'll move on. Now, just a second. We'll focus on, as I said, we are having a very limited discussion now. An overview is what is required. So therefore, I'll move on to the next important area. What are the eligible and ineligible ITC, right? Right. Now, so in the last discussion, my dear friends, please remember, we have broadly discussed. Now, I'll ask you a few questions. I want to know how far you have appreciated. Okay. Therefore, I'll ask you a few questions. Tell me the answer. Then we'll move on to the next area. Okay. First question. When we talk about input tax credit, which step are we talking about? We saw 3-step calculation for any GST. Input tax credit, which step are we talking about? Step 1, step 2, or step 3? Quickly tell me the answer in chat. Rapid fire. Please tell me the answer very quickly. Step 2 we are talking about. Okay. So now when we talk about input tax credit, is nothing but the tax paid on purchases, tax paid on all the expenditure. Broadly speaking, expenditure can be classified into three things. As far as GST law is concerned, what are they? Can you please tell me the terms that we have seen? Whatever expenditure can be there from GST law perspective, three things it can be classified into. What are they? What are the terms we have seen? So input tax credit means what? What all are there as far as the expenditure is concerned? Please tell me the answer in chat. Okay, first one I'll say inputs. Then what? Tell me all the three things. Input, capital goods and input service. So goods, current expenditure, inputs, goods, capital expenditure, capital goods. Third one, services. All services, be it current or capital in nature, are called as input services. Good. So these are the three classifications of the expenditure as far as the GST law is concerned. Now, please note, my dear friends, again, when we talk about input tax credit, we are talking about the expenditure part of it, not the income part of it, not the receipts or the sales part of it. We are talking about the expenditure part of it, right? And we are also looking at from the recipient's viewpoint, okay, because the expenditure is incurred by the recipient. Whoever is receiving that particular raw material or consumable, from the recipient's viewpoint only we are discussing, right? So please keep all these things in mind. And we have also seen what is the method of set-off. So I haven't seen all this. We have seen what is the method of set-off, because input tax can be either IGST, CGST, SGST, or UGST as the case may be. So what is the method of set-off? That we have seen, and the flow chart we have seen. We have done a few problems. Can you quickly again tell me? I know I asked this question earlier, but once again I'll ask so that we can recollect very quickly. What cannot be set off against what? Among I, C, S, and U, what cannot be set off against what? Please tell me the answer in chat. CGST against CGST input against SGST output. Then one more is also there. Shyam, you're right. SGST against CGST also cannot be set off. So good. So CGST input against SGST output, and SGST input against CGST output, you cannot set it off. Good. Now, sir, you would ask me immediately, sir, what about this UGST? You did not say, sir, UTGST. Please note, my dear friends, SGST and UTGST are interchangeable. Wherever I use the term SGST, the same treatment is there for UGST as well, UTGST as well. Therefore, UTGST will not seen separately because same treatment as SGST. So, having seen that one, moving forward, we have done a couple of problems. Next discussion, my dear friends, we are going to see. Okay, now we are in the second step. What all expenditure we have noted down in the last one? What all expenditure, current expenditure, capital expenditure, so many expenditure, rent, purchase, input, so on and so forth. So many expenditure are there. Which expenditure, tax paid on that expenditure can be reduced in the second step? That is what we are going to see now, and which we cannot reduce. In fact, we are going to see which we cannot reduce in the second step. That is what is called as ineligible or blocked ITC. How to get it, my dear friends? This is a discussion we are going to have, something called as ineligible or blocked ITC. So that's what is the discussion. Ineligible ITC, or it is in fact popularly called as blocked ITC. Blocked ITC means what? Whenever I say the word ineligible, not eligible, blocked, all these three things mean one and the same thing. What are they? The second step you cannot reduce. That is what is called as ineligible, blocked, which means what? Second step, whatever the 80 rupees or whatever 70 rupees or whatever tax paid on this expenditure, it cannot be reduced. Whereas eligible, allowable, I use the word, you can reduce in the second step. That is the meaning. Are you clear? Therefore, when I use the word ineligible or blocked or not eligible, it means in the second step, whatever tax paid on this expenditure, in the second step, you cannot reduce. Whereas if I use the word eligible or available, so on, not blocked, like that, it means whatever tax paid on those expenditure, we can reduce in the second step. Are you clear? But broadly, we'll be seeing what is not eligible. What is not eligible in the Pathita, everything else is eligible. That's it. We will see what is not eligible, what is ineligible, what is blocked, what cannot be reduced in the second step. That we'll see. Then every other expenditure becomes eligible. That's the logic. Are you clear? But every other expenditure becomes eligible, okay, but there is one condition. What is the important condition? This question I failed to ask, but you tell me the answer. Every other expenditure is eligible. For example, we'll see motor vehicles are not allowed, not eligible in Papam. Which means other vehicles are allowed. That is a meaning. But there is one more condition for that. We already seen the first discussion. Can you please tell me the answer in chat? Every other expenditure is eligible, provided it is used for dash purpose. Business purpose. That logic is always there. That's why I said in the beginning. And the recipient should also be a what person? The recipient should also be, okay, business purpose, okay, but the recipient should be a dash person. Registered person. The condition always there. Please please remember that one. Therefore, now we are going to see ineligible or blocked expenses, blocked ITC, my dear friends. So these cannot be reduced in the second step. The tax paid on these expenditure cannot be reduced in the second step. That we'll see. Every other expenditure is allowed. ITC on that is allowed as long as it is used for business purpose and is received by a registered person. These two conditions are there. So with this logic, now let's have a look at it. Now, first one, we are talking about motor vehicles, but there are a few changes with effect from 1st of February 2019. There are a few changes, therefore I will discuss in this slide directly. Again, all these are motor vehicles only. Right? Now, I'll do one thing. I'll simply tell the answer. Maybe wherever I get a blank board, I will use this. Okay, here itself I'll use the chart. Now, all these motor vehicles, please recollect, my dear friends. Instead of reading through the entire slide, I'll give a simple flow chart. Here we are talking about, when I say motor vehicles, I'm talking about passenger transport vehicles. There are two types of motor vehicles, my dear friends. One, passenger transport vehicle, PTV. Other, something called as goods transport vehicle. Okay. Here we are not talking about goods transport vehicle. Can anybody give me an example of goods transport vehicle? Lorry, good, truck, so small, kutti lorry, kuttiana, we used to say, na. So all these lorries, mini lorries, etc., they are goods transport vehicle. We are not talking about that now. That we'll see in the next slide. Here we are talking about passenger transport vehicle, whatever tax, whatever we purchase them, will we be eligible for credits or not? That's what we are going to see. Now, please note, my dear friends, this passenger transport vehicle, either we can purchase it or we can take it on rent, lease or hire. Either we can purchase it or we can take it on rent. 1 month rent I take, I give you rental. I can take it on rent or lease or hire. So passenger transport vehicle, what is the criteria? Please note, my dear friends, therefore from 1/2/2019, 1st February 2019, this is the criteria. If the seating capacity, we have to see the seating capacity. If it is less than equal to 12 plus 1, seating capacity is less than equal to 12 plus 1, or the seating capacity is more than 12 plus 1. Sir, what is seating capacity? 12 plus 1 now, what is the meaning, sir? Please note, this 1 stands for driver. So 12 passengers and 1 driver. Okay. So if the seating capacity is less than equal to 12 plus 1, not eligible. You cannot reduce, you cannot, whatever tax paid on these motor vehicles, seating capacity less than 12 plus 1, you cannot reduce in the second step. The tax cannot be reduced in the second step. Whereas if the seating capacity is more than 12 plus 1, then I can reduce, they are eligible. Whereas here, first one it is ineligible, second one it is eligible. Are you clear? Now, can you, if you can imagine, almost all the motor vehicle seating capacity less than 12 plus 1 only, correct? Please note, my dear friend, we should see the seating capacity per bus, per motor vehicle. We should not see 5 motor vehicles I have brought, sir. I will see the combined seating capacity. No, seating capacity per passenger transport vehicle. You have to see one at a time. Okay. So let me put it this way then. For a passenger transport vehicle, for one passenger transport vehicle, if the seating capacity is less than equal to 12 plus 1, which is 12 passenger plus 1 driver, not allowed, not eligible. You cannot reduce in the second step, whereas if it is more than 13, more than 12 plus 1, more than 13, then in that case it is eligible. You can reduce in the second step. If you see less than equal to 12 plus 1 not allowed means most of the vehicles not allowed. Correct? You imagine you take a car, motor vehicles, passenger transport vehicles, now you take a car. Small car like Swift, Figo, etc. Small car seating capacity maximum 4 plus 1. Little bit bigger car 5 plus 1. You take even the biggest of the cars. You take something like Scorpio. You take something like Innova. Innova also maximum 7 plus 1. Correct? Maximum 7 plus 1. Sir, what if I sit one on top of the other, sir? I am sitting on top of me, somebody else is sitting. Please note, my dear friends, we are not talking about the actual seating capacity. We are talking about the approved seating capacity. Therefore, sir, no, sir, my friend is very thin. Unlike me, my friend is very thin. Therefore, 2 of us are sitting one top of the other. 14 of us are going on a trip to Pondicherry, sir. Therefore, whether it's eligible or not, sir. Please note, we are not talking about the actual seating capacity, my dear friends. We are talking about the approved seating capacity. Are you with me? So, Innova, the approved seating capacity is maximum 8. Therefore, you take any car, the biggest of car you take, not eligible, right? Because it is less than definitely 12 plus 1. Sir, then what is eligible, sir? What will be more than 13, sir? Can you please tell me the answer inside? What can be eligible? What seating capacity? Bus is one good example. All big companies, imagine a company like Samsung, Shell, Reliance, etc. For transporting their employees, they'll take a bus, big bus you'll be seeing, especially IT companies. Van, good example. Smaller companies will have a van. But van, you have to be very careful because van also seating capacity, sometimes it is 10, 11 only. So you have to see in case of van, bus definitely we can be sure. Seating capacity is more than 13. Whereas van, we have to see whether it is a minivan or bigger van, normal van. You have to see that accordingly, depending on the seating capacity, van may also be allowed. Sanashwar, your answer is also to some extent can be accepted with caution. So these vehicles are allowed. Are you clear? So as far as motor vehicles are concerned, passenger transport vehicles are concerned, bigger buses and vans, they are only allowed. Smaller vehicles are not allowed because the government doesn't want to allow the credit. That's why they are saying, Solama, they are telling 12 plus 1, 90% of the vehicles will be gone. So you're not allowed to take ITC of that. Sir, what about two-wheeler, sir? Two-wheeler approved seating capacity is 2. Even maximum actual seating capacity can be 4. Therefore, two-wheeler also definitely not allowed. Okay. So having seen that, okay. Sir, what about, sir, passenger transport vehicle now? Ship one, I go on a cruise liner, sir. Or I go on an aircraft, sir. Business class flight, sir. So I go on an aircraft. Will that be allowed? Please note, my dear friends, as far as this is passenger transport vehicle, other than aircraft or vessels not ship. So other than aircraft or vessels, this is the criteria. Seating capacity is relevant. As far as aircraft and vessels are concerned, they are not allowed completely. They are not eligible or they are completely ineligible irrespective of seating capacity. Are you clear? Therefore, the seating capacity rule will not apply to aircraft or vehicle. They are completely not eligible because definitely seating capacity more than 13 only in most of the cases, all the cases. But still then they are not allowed. Are you clear? So therefore, as far as aircraft and vehicles are concerned, whether you purchase it or rent it or lease it or hire it, irrespective of the seating capacity, not allowed. Therefore, so this is the effect with effect from 1/2019. But certain cases, passenger transport vehicles are eligible, allowed. You can reduce in the second step. What cases? 3 categories are there. In that 3 situations alone, it is allowed. What are they? One, if a person is engaged in the further supply of vehicles, I'll explain. Let's take a person X is there. Here they have given the example of Kun Hyundai. Kun Honda, have you heard of it? Kun Honda, what do? They buy the passenger transport vehicle and they sell the passenger transport vehicles. That's their business, correct? They are dealers in vehicles. Therefore, their input is also passenger transport vehicle, output is also passenger transport vehicle. Therefore, if I am a dealer in such motor vehicle, then even though I buy the passenger transport vehicle, for me alone it is allowed. Are you clear? Because it is my direct input here. If somebody earlier was saying, sir, expenses can be direct or indirect expenses. So as far as this car dealer is concerned, without buying the car, how can he do business? Hyundai main purchase itself will be car only. Therefore, it's a direct input for him. Therefore, for such car dealers, it is allowed. Or any other dealers, flight dealers. allowed. So all those passenger transport vehicle dealers are there, it is allowed. Second business, what is that? I am in the business of transport of passengers. For example, fast track. You have heard of it now, fast track, French track, so on and so forth. Fast track, French track, what their main business is, their main business is to transport passengers, is it right? Therefore, without buying the passenger transport vehicle, they cannot do the business. Therefore, for companies who are engaged in transport of passengers like fast track, or in case of what is it, aircraft, we can say airliners like Indigo, Jet Airways, so on and so forth. Their main business itself is transporting the passengers. So without buying the aircraft, how I can do the business? So for them, it is allowed. Third one, driving school. So for driving school, I have to teach you driving. I have to buy a car, then only I can teach you driving. So for a driving school, definitely they have to buy a passenger transport vehicle. Without that, they cannot teach the driving. Therefore, for driving school alone allowed. Therefore, these three persons, my dear friends, I'll recollect. One, if I am a dealer in such passenger transport vehicle, that is my business itself is buying and selling that passenger transport vehicle, then it is allowed. Second one, I am in the business of transport of passengers like fast track, French track, rent Delhi cabs, Meru cabs, so on and so forth. My business itself is transporting passengers, or Indigo, airliners. Third one, driving school. I help you take the license. I'm a driving school. Without a car, I cannot do the business. Therefore, for all these categories, allowed. Now coming to the next one. So this is passenger transport vehicle, my dear friends. Now, this next slide, situation number 2, we are now moving on to goods transport vehicle, like lorries, mini lorries, dumpers, tippers, cranes, so on and so forth. All these are goods transport vehicle. Are they eligible or not eligible? They are completely eligible. You can reduce in the second step, no problem. Whether you purchase it or take it on rent or take it on lease or take it on hire, does not matter. Right? So you can do anything. So all of that you can reduce. It is not blocked. It is allowed. Now, what about repairs? Sir, in motor car means repair will be there. Insurance I will take. I will do spare parts, oil, etc. All these I will put. So what about this? Please note, my dear friends, here also the same logic will attract. That is, if the seating capacity is then equal to 12 plus 1, then not allowed. More than 12 plus 1, more than 12 plus 1, then in that case allowed. Same logic will apply here also. Alright, so if the passenger transport vehicle seating capacity is this one, less than equal to 12 plus 1, all these related expenditure like repairs, insurance, oil, all these are also not allowed. More than 30 means allowed, or in case of an aircraft or vessel, always not allowed. But if they are in certain business, what business? The three business we have seen. What are they? Transport of passengers, dealers in motor vehicle, driving school. For these three business, in any case, it is allowed. We have seen. In that case, these expenditure also becomes allowed. So if the vehicle itself is not allowed, then this expenditure is also not allowed. Vehicle itself is allowed, then this expenditure like repair, etc., they also become allowed. So underlying vehicle, whether it is allowed or not, you have to see. In case of goods transport vehicle, no problem. All these expenditure are allowed. Lorries, etc., mini lorry, etc., they are allowed. Therefore, these expenditure are also allowed. Now coming to the next one. Next category, ineligible credits. This category number 2. First one is vehicle, first category, second category. All these are not allowed. What are they? Food and beverages. You go to a hotel, have food and beverages, or outdoor catering in some function, in some marriage, etc. They are putting you are conducting a seminar, you are conducting a program. Therefore, you are engaging an outdoor catering person who comes and serves you the food. So either you go to a restaurant or outdoor catering, or third one, beauty treatment, plastic surgery, cosmetic surgery. All three are similar in nature. Last one, health services. All these are not allowed. Right. So you have to remember this list, my dear friends. No other go. Right. Therefore, please remember. Now, sir, what is the logic, sir? How I can remember, sir? Now, please note, my dear friends. This is the logic. If you're able to follow the logic, it's good. Otherwise, you have to buy hard the list. No other go. What is the logic, sir? Now, please note, my dear friends. In all these cases, the supply is extinguished, correct? Once I consume the food, food is gone. Similarly, once I do the beauty treatment, etc., the service is over. That's it. There is no further supply. Is it right? There is no further supply. Is it right? Therefore, wherever the goods or services are extinguished, there the credit is also extinguished. That is the logic I will say to my students. So you remember that logic. But if you are not able to remember the logic, no problem. By heart the list. The third one, insurance. Third category, insurance. Insurance, two insurance are not allowed. Life insurance and health insurance, they are not allowed. Sir, what if I take a group life insurance or a group health insurance, sir? Sometimes companies, big companies, they'll take group life insurance for all the employees. I will take. Shamraj, okay, he has asked a question. Sir, if the vehicles are used for business, can it be reduced? No. Please note, Shamraj, vehicles are used for 3 businesses. Alone it is allowed. What is that? Only for 3 businesses allowed. That is, I'm a dealer in vehicle or a passenger transport company like Friends Track, Fast Track, like that, or driving school. Only for these 3 businesses is allowed. Any other business, even the official purpose I'm using, no, it's not allowed. That's why we are seeing this. Good. Anyway, so I got the question. Fine. So now moving forward, now please tell me, my dear friends, here we are seeing insurance. We are seeing 2 insurance. One is this life insurance, second is this health insurance. Some companies, they take a group life insurance. Some people take a group health insurance for all the employees I take. Then in that case, can I reduce it? Can the ITC be eligible? Answer is no. So even though it may be an individual life insurance or an individual health insurance or a group life insurance or a group health insurance, doesn't matter as long as it is life insurance or health insurance, not allowed. Okay. But is there anything else which can be allowed? I told you only life insurance, health insurance not allowed. Is there any other type of insurance? Can you think over? All these are very important. Even for exam, it's important. Marine insurance. Okay, let me call it as general insurance. Okay, on the vehicle. But marine insurance, Ashwath, will it be allowed or not? Think over very carefully and tell. This I accept. Sairam's answer I accept. Fire insurance, loss of stock insurance, loss of profit insurance, correct? Building insurance, missionary insurance. Idella irka? No, idella it's not there. So please note, my dear friends, only life insurance, health insurance are not allowed. Any other insurance, whichever I said now, everything else is allowed. Are you clear? That's what I said. I am now telling only the ineligible. Everything else is eligible. So which means what that missionary insurance is eligible, building insurance eligible, loss of stock eligible, loss of profit eligible, everything you can reduce. But as Ashwata said, marine insurance. Anybody has a different answer? Marine insurance, others, you tell me the answer. Should this be allowed or not? Marine insurance means I presume it is ship insurance. Ship insurance, please tell me, my dear friends, should it be allowed or not? We should see what type of ship it is. Is it a PTV or a GTV? PTV and a passenger transport vehicle. Is it a passenger transport ship or a goods transport ship? If it is a passenger transport ship, we have seen not allowed. Irrespective of seating capacity, vessel aircraft are not allowed in Patham. Whereas if it is a goods transport ship, ocean liner, goods transport ship, then we have seen that goods transport vehicles are allowed. Therefore, insurance on that is also allowed. Therefore, please note, my dear friends, if it is a motor insurance, then the earlier point will attract. Seating capacity we have to see. In case of passenger transport vehicle, or in case of passenger transport vehicle, if it is aircraft or vessel, completely gali, not eligible. Whereas, if it is used for certain businesses that we have seen earlier, or if it is a goods transport vehicle, then in that case it is allowed. Therefore, insurance is also allowed in those motor vehicles. Are you clear? Therefore, motor insurance alone, be very careful. You have to go to refer to the earlier point. Therefore, be very careful, my dear friends. Then, certain categories, it is allowed. Have a look at this bottom below point which is there, my dear friends. Have a look at it. Eligible categories. In these categories, eligible. Now, please note, in the end, eligibility will always be there in whatever points we discuss. Next, we'll discuss 2 or 3 more points. Then, in almost all the following points, one of these 2 eligibilities will be there. There are 2 broad situations where credit becomes eligible. What are they? One, if it is obligatory as per law. Obligatory, if it is mandatory as per law. Then in that case, this life insurance and health insurance also becomes allowed. Can anybody tell me a law, as per any central law or state law, where life insurance can you tell me any law where life insurance or health insurance is mandatory? Can you think of anything like that? Any law where life insurance, health insurance is mandatory? Have you studied any labor law where life insurance is mandatory, health insurance is mandatory? Now, please note, my dear friends, there are certain establishments called as hazardous establishments. Correct? Hazardous, and their very nature is very dangerous. Hazardous establishments. There is for example, Sivagasi, cracker units are there. Working there itself is a big problem. Sometimes blow up, nothing can be done. So therefore, there is a state regulation and there is a district regulation which says that, municipal regulation which says that for these plants, firecracker units, you definitely have to take life insurance, health insurance. Then in that case, it becomes allowed. And law itself is telling you have to take insurance. Then in that case, it becomes allowed. Second, I'll give you other chemical establishment, hazardous chemicals, acids like that people are processing. Then insurance is mandatory. So in such cases where the law itself says insurance is mandatory, then it becomes allowed, right? So this, all these could be examples. It depends. There can be many laws. So if a particular service, particular insurance, life insurance, health insurance, mandatory as per law. Nowadays, even COVID times are coming now. Therefore, what government has given a regulation now, offices more than 50 employees, they definitely have to take COVID insurance, health insurance, they have to take covering COVID for everybody, correct? Therefore, nowadays, almost all concerns, Tamil Nadu, in fact, it is there, if I am right, more than 50 employees are there now. You have to take health insurance for all the employees and COVID has to be covered. They are brought in. So in that case, it becomes allowed. Health insurance becomes allowed, right? Therefore, you have to see the laws and you have to know the law very clearly. Next case where the life insurance, health insurance are used for providing outward supply of the same category, that is reinsurance. I'll tell you an example, my dear friends. Let's take an example of one insurance company, let's say Reliance General Insurance. Okay, so it sells insurance to its customer. Let's say this person is there, person number X, Miss X is there. Reliance is selling insurance, but sometimes Reliance will take something called as reinsurance from another company, let's say Bajaj Alliance. From Bajaj Alliance Insurance Company, will take a reinsurance policy. Why they do that? Can you think over? To minimize its risk, correct? Insurance company also, to minimize its risk, it may take insurance from another company for the same supply. So in that case, for this Reliance company, even though it may be life insurance or health insurance, it is allowed because it is used for providing the same life insurance or health insurance. Are you clear? That is what is called as same category. Same category means what? The input is also same, output is also same. Input to insurance, as far as Reliance is concerned. Input to insurance, output to insurance. Therefore, it is allowed. We can also say this as same category. Now, what is the meaning? It is a direct expenditure, correct? Just like we saw that motor car, Hyundai. Their direct input is motor car. Therefore, when they sell motor car, it's okay. They buy the motor car, ITC is eligible for them. Like that we have seen. So this is called as a direct expense. So if life insurance or health insurance is a direct expense, then it is allowed. Are you clear? So therefore, please note, my dear friends, I will now, from now onwards, I'll say like this. I will say this as, first one as, first exception, one of these two exceptions will definitely be there. In the other categories also we discuss. First one, I will say it as mandatory as per law exception. So you have to watch out whether it is there or not. Second one is called as direct expense exception. So one of these two exceptions will be there, in which case, if that situation is applicable, credit will be allowed. For this third category, in fact, for both second and third category, for the earlier category and this category, both the exceptions are there. So in both these cases, mandatory as per law or direct expense, then in that case, they become eligible. So please note, my dear friends, be very careful. These two exceptions are applicable for the second category as well, which means what? Come to the second category. Food or beverage is also the same exception. Direct expense exception is there. Mandatory as per law exception is there. Now, can you tell me, is there any act which says that you have to provide food and beverages to your employees? Mandatory as per law, food and beverages anywhere covered? Yes, there are labor laws, correct? Factories Act is there. Factories Act says more than 200 employees, you have to provide food to your employees. Then in that case, it becomes allowed. Are you clear? Same way, direct expense, that is, let's take an example of Saravanaprabhu. You go to a hotel, let's just be selling some, it's providing restaurant service to person X. Sometimes it run out, let's say person X is ordering orange juice. Okay. Now HSB, somehow oranges it is not there. Therefore, what it is doing is nearby restaurant. Nearby restaurant it is going, purchasing the same orange juice and giving it to its customer. Okay, this is what is called as supplying the same category, correct? but HSB will charge 100 rupees. The nearby restaurant, same orange juice only, will charge 50 rupees. So that is how they do. That we go to Saravanaprabhu, we'll pay 100 rupees, but nearby shop, same orange juice, we will not pay that much. So anyway, so point I want to take is, if such direct expenses there, that is inward supply is also orange juice, outward supply is also orange juice, same category, then in that case also food and beverages becomes allowed. Are you clear? So all these ineligible in the second and third category, they become eligible if two exceptions are there. What are they? One, it should be mandatory as per law. Second, it should be used for the supply of the same category, which means it should be a direct input and output should be the same. Okay, so please note these exceptions, my dear friends, and the other things also will come. Next one, membership of a club, health fitness center, gym, travel benefits to employees on LTC. LTC na leave travel. Okay, leave travel, income tax law also you have studied, leave travel concession, LTC. So all these are personal purpose, my dear friends. Therefore, specifically they have blocked this. Right, so membership of a club, presidency club, corporate club, social club, etc., etc. You take a membership, not allowed. You take a membership in a gym for your employees, not allowed. You give various travel benefits to your employees, not allowed. But these three also becomes allowed. That is eligibility. Exception is there if they are obligatory as per law, which means it is mandatory as per law. I don't know which law says any of these are mandatory. But I am thinking that at least gym services they should make mandatory, because nowadays youngsters are becoming, including me, I should not blame the youngsters, right? So everybody is becoming very unfit. Therefore, at least I am saying that definitely there should be a law saying that you should either have a gym or you should sponsor them to a gym. 1 hour daily you should work out. But as on date there is no such law. But if there is a law saying like this, then it may become allowed. The next one, point number 5. Construction works contract. Now I'll do one thing, my dear friends. I'll stop with this for the day, because tomorrow also we are only continuing. So I don't want to rush through. Okay. So I'll stop with this for the day. Any doubts you have next 5 minutes or so? Any doubts you have, because I have another thing at 5:35. I have to move to another meeting. So any doubts you have, you ask me now. Till whatever you have covered so far. There are a few more things which we'll cover tomorrow. So if you have any doubts, we'll take it up, or else the balance 5 minutes also, I will cover 2 slides and we'll finish. First is sum. Shashwat, you are still confused with first sum. Special treatment is required. So we'll talk separately. I'll also share my number with you. So still you are confused in first sum. Then we have to definitely talk separately only. So my number, anyway, it's there in the presentation, but those who want, you can reach out to me. It's 53. Okay, so reach out to me, WhatsApp me. We'll discuss. Any other doubt which not already taken up? If not, I'll go to the slide. I'll take 2 more slides. Can I move on to the slides then, assuming there's no question? Because I'll stop by 5:35 max. Done? Right. So since no questions are coming up, I'll move to the slide. I'll cover 2 more slides. So in case of next one, 5th category, which is not allowed, is works contract or goods service used for construction. Please note, works contract is also relating to construction only. Have a look at this, my dear friends. Construction of all these things not allowed. What are they? Construction. This is a factory building. First one is also building. Last one is also building. This is office building. This factory building. Okay. So construction of an office building or a factory building or a residential building is also not allowed. All these construction related are not allowed. Why? Because construction is small value item or high value item. Please tell me. Crores. Nowadays, especially running into crores, correct? Therefore, government doesn't want to allow you that much credit. That's the idea. Okay, so it's a huge, high value item. If I allow credit for you, if I allow to subtract it, then you will never pay tax. That's maybe the logic. So therefore, all these high value items are not allowed. Then next, so these are not allowed, be it a factory building or an office building. Then pipelines outside the factory for transporting chemicals, fuel, etc. Pipelines outside the factory, not allowed. Telecom towers for telecom companies also not allowed. All these are immovable property, my dear friends. Can anybody tell me the logic? Apart from I told you high value items, okay, but can anybody tell me the logic? Sir, why immovable property not allowed, sir? One logic I told you, high value items. Any other logic can you say? Why immovable property ITC not allowed? Exactly. See, please note, my dear friends, now we are talking about expenses. But think from the income point of view, that is outward supply point of view. You already saw that definition of goods and service. Goods means movable property only. Immovable property are not covered under goods, neither will come under services, right? Exceptions are there, but generally speaking, immovable property out of GST, correct? Therefore, when you supply immovable property, there is no GST. Same way, when you buy immovable property, there should not be any GST. That's the idea. Okay, so therefore, that could also be one of the logical ways of answering. So therefore, immovable property completely out of GST law. Therefore, they are made ineligible. But one exception is there, which is direct input. That is, if input is also same, that is construction. Output is also same construction. Then it is allowed. Sir, who will have input also construction, output also construction, sir? There is a promoter. Flat promoter is there. Flat builder is there. He is selling to customer. But promoter does not have the manpower. Somehow he's very busy. He's not having the labor. Therefore, what he does is he outsources to a builder. Okay, sir, I am constructing some 100 apartments. I will subcontract that work to you. You construct that 100 apartments and give me. So as far as this promoter is concerned, his input is also construction, output is also construction. Therefore, for such promoter is allowed direct. I said now, direct input exception rukum, direct expense exception rukum, or mandatory as per law exception rukum. Here, this is the direct expense exception. So if the input and output are the same category, then it is allowed, otherwise not allowed. Now, what about these things? Please note, my dear friends, one more thing before we come to the next one. So when I say construction, I also include repair, reconstruction, repair, renovation, addition, alteration, repair, etc. To the extent of capitalization, that is, to the extent I am doing repair, alteration, addition, renovation, etc. To the extent I am capitalizing in my balance sheet. Capitalization means what I am putting it in my balance sheet. Then it is not allowed. Okay, so the word construction includes all these things: the renovation, repair, addition, ellame, they are not eligible as long as they are capitalized. Now, coming to the next slide, have a look at this, my dear friends. Okay, so factory building not allowed, but inside the factory building, what will be there? Machinery will be there. Correct? Machinery allowed or not? Machinery is allowed. No doubt, machinery is allowed. Then inside the building, there will be interior decoration. Now, maybe the last question for the day. I'll come to this interior decoration. I'll ask you the question. And last one, I'll finish this one alone, and then I'll come to interior decoration. Repairs, if not capitalized, is allowed, because the last slide we have seen now, repairs, if it is capitalized, not allowed. Whereas repairs is not capitalized. Sir, when will repairs not be capitalized, sir? If it is current repairs. Correct? Current repairs means what? Small repairs, you will expense it off, write it in the P&L account. Correct? Write off in the P&L account, then it is allowed. Whereas the repairs, if you are capitalizing it, take into your balance sheet, not allowed. So therefore, repairs, if not capitalized, it means the current in nature, small repairs, they are allowed. You can set it off, others not allowed. Now come to the last one, my dear friends, interior decoration. Now you please tell me, interior decoration, should it be allowed or not? Please tell me. I'll give you two examples. First example, interior decoration, like, so I'll just give two examples. Interior decoration, something like chairs, etc., which are movable. Second, something like false ceiling, which is immovable. You tell me which should be allowed. Two things I've given, yes, no. You tell me the answer separated by commas. Board should be allowed, yes, comma, yes. Chairs, yes. What about, because they are movable, good. What about that particular interior false ceiling? No. Why false ceiling not allowed? Because false ceiling is also immovable in nature. So as far as interior decoration is concerned, see whether it is movable or immovable. If it is immovable, not allowed. Whereas if it is movable, means it is allowed. Right. So with this, I'll stop for the day. As I said, there are a few more things which we'll take it up in the tomorrow section. So along with the others. So with this, I'll stop. So I also asked any doubts are there. Nobody came forward with any doubts. Last chance. Any doubts are there?
So any doubts, students can get it clarified from the faculty. Any doubts, students, with regard to clarified? Okay. I think
So when no doubts are there, it means you are completely, absolutely clear.
yeah, should be because they have been hearing the subject for the past 7 days. Maybe sometimes as time passes by, they may have some clarifications. I think this video will be uploaded in the YouTube. Students can have a you can revisit it, and then any doubts you can get it clarified even tomorrow. So on behalf of the Department of Commerce, DG Vaishnav College and the Institute of Cost Accountants of India, I thank CMA Saravanaprabhu for his valuable time in spite of the busy schedule. September and October is your peak period. So in spite of the busy schedule, you have been with us. Thank you so much, sir. We'll meet tomorrow again by 3:30.
Sure.
Thank you.
We'll see.
Thank you.